All right. Happy Mother's Day to everybody who is celebrating Mother's Day. If you are here, hope you have had a great day. Let's get started for the session today. And I have quite a bit to go over. The macro landscape is changing. So let's talk about it. But I also want to show you guys a lot of setups. So it'll be a mix between both of those things today for my part. Okay, so for those of you that are on Discord, you've seen a bunch of reports come in. I forwarded the ASML and PINS report by Goldman Sachs to the T's update channel in Andrew's Discord, so you can have a look at that if you like. It's also on the public channel on mine. Okay, tactical sentiment, not much has changed. What I did see that was a bit interesting was the amount of SPY rolling and the amount of the way that the market's moving. So, first of all, obviously some outright calls that were bought, and then the fact that they are mid yellow means mid spread, so we know it's somewhere that there are both buyers and sellers there. But then you have a put spread which is downward facing. This is quite small, 2,000 contracts, but notable. Okay, it's notable. And then you have a bunch of sold contracts, 565. So they're selling some contracts above. They're selling some 540s for October. But these are put spreads, remember that? I have no idea what a jelly roll is. I mean, it could be an apple Danish for all I care. Honestly, whatever that's written here, I'm looking mostly at the strikes. I'm looking at the expiry. I'm looking at the size. These are quite negligible. It's like 500 contracts is nothing. The 2001 also not really. The main two were the top two, which were 10,000 contracts. And that was mostly just bullish action. Okay, so the rest of this is just hot garbage that is part of another leg of another spread. This might also be a part of another leg of another spread, but you just understand that you've seen one side of it. Okay. All right. So, well, having that in mind, it doesn't say jack shit about price action because or rather the predictability of price action, right? But that data is one piece in the puzzle that will help us to put things together. Okay. The next thing is that hedge funds, where's the hedge funds one? Hedge funds, in my opinion, are very underexposed to the market. I hope I can find it. Here we go. Look at this. Okay. So currently, hedge funds are just slightly positive exposed. And the move has already happened midway. We are already more than halfway through the bottom to mid move. So we are already past the middle part of this move. And hedge funds, if they don't catch a piece here and the market continues going higher, guess what's going to happen? They're going to get squeezed. Okay. Especially because the fact that they probably have short positions that they are hedging with. That's why they're fucking called hedge funds, right? So the shorts get rinsed, they have to close, causes a bigger move up. So today, kind of like where you have pre-market up 2% or 3% SPY might cause that eventually. But we need to see how the dealers are going to defend the situation because too much exposure, they also have mechanical flows that they will have to be taking into account. Okay, now let's look at the sector flow. So sector flow wise, remember how just a few weeks ago, do you remember that the top portion had almost nothing in it, right? 1 or 2 months ago, I showed you guys this. I keep showing you guys this every week, right? Now look, barely any selling, mostly all in the buying range, right? So this is what we call good or decent breadth. The breadth is coming back into the market, which is nice. Though Infotech was the most sold in the past 20 days, right? And then the past 5 days was also sold. Okay. Weird. This is a weird one, the kink in the data. Okay. So there are actually some people that are still short Infotech the past 20 days and 5 days. And then along with that, you have utilities in the past 5 days, you have materials, and you have real estate. And then macro products is like very small. So we'll just ignore that, right? But the one they've been pounding on is healthcare. Okay, and then consumer discretionary, and then energy this past week. Okay, and single stocks. That's the main flows in from last week. It doesn't mean that it will continue this week. We're just looking at what they put their money into. What is the trend shifting to, right? So far, it's a mix between defensive, right? Defensive. These two are kind of defensive. Consumer discretionary is cyclical, actually, and energy is cyclical. So everybody's moving more into a cyclical portfolio. Though there are some considerations to be understood. The reason why energy is rallying is because summer is approaching. So the energy market is pricing in higher earnings for these businesses. It's cyclical in nature. Consumer discretionary, we have Amazon and Tesla being the leaders in this, and they have been oversold as of late. So now we're seeing a lot of the reversal into there. And healthcare, this is simply a hedge. Okay, it's a defensive posturing hedge on a very oversold sector. So understand where and why money is going into the different parts of the market so that you will develop a context behind it, and then you will make the right choices for your setups. Sometimes you'll make the wrong choice for setups, leading to wrong setups, leading to wrong stop loss, leading to wrong everything. So just be aware of that. And then S&P implied move through 516, which means end of this week is 2.34%. Okay, and then you have China PPI data out on Saturday, which was just passed. We'll see how Chinese markets are doing, which it's currently 1% up or so, right? And yeah, there's a bit of a report here about net flows, but not really that important. And the other thing was, yeah, okay. So that from that perspective, you gotta understand that right now, from the technical perspective, putting those together, right? This is your main area that you need to be focused on what your plan should be. So once again, two types of scenarios here. Last week, the scenario was pullback into potentially bottom here, and if it got really bad, then we said bottom somewhere here. But this was I said this was very unlikely, right? Here would have been more credible, but we didn't even get that. We just had a range, test a few bottoms within range, and then we blasted up on Trump news. So now where we are after China met with America yesterday, and then they released some news and then said, oh, we are friends again, right? Now the market's looking to break this high, which is 5,800, let's call it. Okay, 5,800 to be clean and simple. Now, if 5,800 breaks, that is not bullish yet. Meaning to say, it's not fully bullish yet. When I say bullish, I mean like we are ripping, right? We need to kind of reject and have an imbalance situation here, right? Where we are breaking out and getting rejected, right? Or coming back down for a retrace. And then on that retrace is where I can really start to get bullish, okay? This is where I would really love to get bullish. Now, when the market opens today, I personally wouldn't be playing calls or rather upside positioning, because you're overpaying for your positions, number one. And number two, everybody's going to be buying calls. The dealer exposure is going to start getting saturated with a lot of calls because of people chasing upside, especially if what I said earlier about the hedge funds comes into fruition this week. You're going to see a lot of skips moving up, and you will not be able to hop on board because it's simply way too much in premium that you'll be paying. You're priced out. Okay, so you have to wait patiently for a pullback if you want to trade the upside. Okay. Now, if you get up to 5,800 or somewhere below 5,800, because you have a 38.2 level here at 57.67, these fibs tend to be pretty damn accurate sometimes, right? Your first rejection could come as soon as 57.66, right? On SPY levels, that is really not far from where we were, right? Right here, 572, okay? Your first rejection could come at 572. Now, if you have a 572 rejection, then you can play scenario number two, which is short position, okay? And that means that you reject 572 or you reject somewhere around 575. So 572 to 575, somewhere around there. Okay. And that will be your short-term area where you will be looking to take a short position. Right there, somewhere there. Okay. Now, having said this, the short position, once again, be aware, and this is very important, don't hold on to it for too long because the VIX is already smashed. It's headed down, right? No volatility means no back and forth. So if you're looking for that move down, when it does happen, take your damn profits like yesterday. The moment you, in fact, you have 20% profits, take some off the table immediately. You have to lock it in, okay? When volatility is low, the market will bounce very quickly. All right, so be aware of that. Exact same setup on NASDAQ, except for this is a bit more bullish than SPY, right? So with NASDAQ, it's actually gapped above the previous high here, the range. Okay, this is a breakaway gap is what we call it. Now, that means that the NASDAQ can get up to 2100 before it's rejected. It could. So the squeeze, in other words, is coming from which sector of the market? Somebody, if you're following along. What sector of the market will put on the squeeze? That's pretty simple. What's leading? Nobody here? Healthcare? No, not healthcare. Tech. Correct. Great. Okay. I'm glad people are following along. I was checking. I need to make sure.
Tech.
Yes, tech. That is correct. So you should be looking for setups in tech. Okay. If you want to play bullish move, bullish slanted bias, that's where the alpha will be, because if this doesn't change much until pre-market goes even higher, then tech is likely going to move higher pre-market if it hasn't. If it has, then just ignore it. Then you have to look for short opportunities. Okay, IWM also will likely open up here somewhere. I'm gonna guess like it's probably at 208 or 209 now. That one is gonna see a very big inbound. What is IWM at? Let me just check real quick. It is up 2%. Is at 205. Okay, so it's here. So IWM also very, very likely, if it's already here, right, then it's gonna probably aim for that close up into 209, 210, right? So we're setting up for a pretty green day today so far, if things go as planned. But you cannot play calls. Remember that, okay? You cannot aggressively take calls. If you're going to take calls, they have to be only in tech. Okay, now, having said that, technicals is very straightforward. Let's move into some other things that are important. Gold, okay? I don't trade it, but I did see very unusual flow on gold. Okay, I'm saying very out the money puts on GLD specifically in the 260s. Okay, down here for multiple months out. Okay, so there is a possibility that with all of what is just happening, if the scenario plays out extremely bullishly, like Trump now puts out a tax cut proposal on the table, stock market will love that. They'll eat that shit up. This somehow times into a Powell that's continuing to be dovish, also going to make the market rip, right? But from what I see here, the 10-year yield is now pricing in the unlikeliness of a Fed rate cut. So further confidence in the market that we don't need a rate cut, okay? Because yields are going upward, right? So yields going up, people are confident that we will not need a rate cut. Dollar has also moved back. This is what I was telling you guys. The main macro indicator that is quite bad for the US economy, but great for the stock market, is a dollar being down, Okay. Though it pulls in a lot of investments to the country, but it does lower the currency parity between nations. VIX, I'm not going to go through it. So let's very quickly go through a handful of setups that I'm looking at for this week. NVIDIA, I'm going to go through very quickly. Hopefully you're playing around, following along. So 122, key level on NVIDIA. We probably are at, what do we know? Yeah, 119. So we're not even that far off, right? 119, somewhere here, right? NVIDIA opens up. Two ways to play this. Your key pivot's right above you at 122. Your key pivot for downside is going to be around here. So 110, 122. Breaks 122, you need to wait for the break and retest, and then the upside expansion. But remember that this, because it's such a big wave up already and it's likely to gap up here, the likelihood that it continues pushing higher out of this, quite slim. What I would expect is it breaks above and then pulls back to kind of capture the liquidity that's in this area instead of pushing all the way. And because NVIDIA has been kind of trending down the past couple of days. So my guess would be a break. It takes out the highs here and then pulls back. AMD, there's some chatter about this now. A little bit more chatter coming into the market. So we will see if this can actually finally move. But I think it's also up pre-market. AMD 105.90. So 105.90 is the top of the candle. Okay, not that crazy, but this could be an intraday setup, right? You see the difference here? This is actually a decent range for an intraday setup. Okay, you're at 105.90. That's the top of range, basically, right? If you get a market open in AMD and it pulls back, you can take a long position with a very, very nice risk off for the upside here at 115 because it's yet to move. We're still here, right? So if it comes back, you take it, boom, go up. That's one of the setups that I'll be watching for intraday day trade. Okay. Tesla, massively up, right? This one, Andrew was telling me earlier, I think it's 4%. It's mad. Something like that. Tesla, where are you? There. Yeah, 312.60. So Tesla, you're already here. Here. Right? So since you're already here, the only way to play this is to wait for a retrace. It will open here, wait for the retrace. If it retraces, you can enter long here. If it doesn't retrace, then it's likely going to go up into 330, 340. Knowing Tesla, when Tesla gets into a frenzy, it can even get up to 360. Like this stock is mad and unpredictable, right? So, but my view is the only way the long would make sense is if you are here, you pull back into the liquidity area to pull liquidity, and then you can move up into the upper levels if you want the upside. If you want downside, then good luck to you. I'm not playing the Tesla short. Caterpillar, nice setup. Once again, watching this, I put it on your radar 3-4 weeks ago. I'm refreshing your memory to show you this setup. Nice textbook breakout from a downtrend, moving back into a uptrend. This is on a 6-hour. If you go into the 4-hour, it's even more beautiful, right? And you can see that it's trying to push up here. So if you can break above 340, this level here, and maybe pull back to kind of bounce in this area, I would be happy to take some 360 calls on this one. I'll take it in the future, but I'm just telling you guys about the setup. Amazon. I think it already broke. Is this a gap and go? Amazon 200. Yeah, it's already broken. So this will be a breakaway gap, and this will likely be one of those that will get rejected at 205, 206. Be aware of that. This will be your next rejection. Then wait for the bounce, but there might be a chance that it goes for a gap fill. All depends on how Nasdaq is going to perform as the market opens today. So now Celsius, that's about TTD. I don't know if you guys saw this. It moved pretty massively, 18% on earnings. Unfortunately, did not take it, but it is still a massive move. And yeah, those are the few that I'm putting in front of you guys. Like it's really nice, easy setups, but the rest I'll be posting on the snipe list. It'll be out on the Discord pre-market. But yeah, that's my end of this. I think if you were being very realistic about this is not the time to go gung ho in upside call positions just yet. Uh, though you should already be long, and that doesn't mean that I'm short. I feel like people always misconstrue this, right? Part. You have to be able to go long and short at the same time. But the point is that here is a terrible time to be playing longs because they will be overpriced and a lot of people will be buying them, and therefore you will make very little money. And the way I like to think about it is if you own a shop, would you like to sell something with high margins or low margins? Do you want more profit or do you want less profit? Like you own the shop, stop buying calls right now because calls are expensive, especially if you're in the game of buying and selling calls. You know what I mean? Like I feel like that's logical, right? You're a shop, you are buying calls. If calls are more expensive in general, you probably shouldn't be buying calls because the profit margin is very slim. So try to augment yourself for a pullback at some point and take the long, then it makes a lot more sense. Um, if you want to play the short, it's a great time to play a short if you can get confirmation, which means you're looking at this entire area very, very carefully on the 4 hour. You won't have, like, you don't need to make a decision right away. Wait for the price action to develop, be patient, and then play the short. Okay. And that's my piece on this. And yeah, thank you. Hand it over to Andrew.
Yup. I'm gonna start by telling everybody how sad I am because I drank my slushie.
Huh.
So now I don't have any slushie left, so it is what it is. I'm gonna go over a few things. The first being fear and greed, talking about what T talked about, right? So, if you guys recall, a few weeks ago or a month ago, I don't even know how long ago it was, right? We were on here every Sunday telling you guys, stop listening to the media. They're fucking stupid. Stop listening to the politicians. They're fucking stupid. Shut up and buy the dip. And in the moment, it sounds harsh. And people are probably like, yo, the guy's a fucking asshole. And now you're looking back and you're like, man, I should have bought the dip. The reason it's important is if you look at fear and greed, we're back in extreme greed. So if you look at, the fear and greed index, when you're looking at this, it's really scary. The market's really scary. Things aren't as fun to buy. And now when you're here, everybody's talking about all-time highs and these companies are undervalued and all this stuff, right? So, one of the whole reasons why me and T do this is to try to cut through all the noise and be as blunt as possible so you guys don't get sucked into the propaganda machine that is funneling all the information into the algorithms and all this crap and try to stay as true to the data as possible, right? So that's where I'm going to start, right? We just had this massive move from the lows where we back tested the previous high, right? And I get it. Hindsight, it makes everything feel so different. But you look at it now, and we talked about this a few weeks ago, and we said, does this look bearish to you? The answer was no, it doesn't look bearish to you. What it looks like is a retrace of the wave. Call it Trump, call it Republican politics, call it whatever the hell you want. It doesn't fucking matter. It's wave structure. We had a pullback. Was it tariff news? Was it this? Was it that? I don't care what you think it is. All I care about is I bought stocks at prices that I liked. I could care less who the politician was that said it because it doesn't fucking matter. So the reason we're starting this is because, you know, where we're at now, people are like, I want to get into the stock market. I want to buy now, right? And you're not late, but you're also not early, right? We haven't gone to all-time high yet. We haven't broke all-time high yet, right? There's still a lot of opportunity out there, but you're definitely not early. You're definitely not in where you should have been because you might have gotten sucked into the machine. Now I want to go back to Tesla real quick before I get into the playbook, because I've said this countless times on this, during different lives. And I've told you guys, a million times over, when the stock comes into the golden pocket, it is not a place where you feel warm and fuzzy. When you are buying stock at these prices on these big waves in these golden pockets, you're not hearing all the amazing things in the future this company is going to do. You're usually hearing this company's in shambles, leadership is bad, they could go bankrupt, like this is a horrible company. And I try to always tell you guys, block all that out. If you believe in the company, you believe in the technical analysis that you've done, you like the risk of where you're looking at, then you take the risk. If you don't, then don't do it, right? The reason I say this is this was, this is a weekly candle. So 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks ago, right? So 2 months ago, we talked about the first time Tesla came into the golden pocket. You can go all the way back to the old charts with the lines that showed Tesla coming down to the golden pocket area, right? And when it got down here, we said, this is a great place to start to allocate some risk into Tesla if you like it down here. It wasn't fun. It wasn't exciting. It wasn't, you didn't get the warm, fuzzy feeling when you were buying it. But here you are now pushing 314, and we have a target of 337 this month, potentially 400, right, on this wave. And you're starting to feel more comfortable, right? And so that's the reason why it's important when you guys decide, what style of trade you're doing and where you're taking risk. When you first take that risk, it's not fun. But now when you're at 314 and you bought it at 220, it feels a little bit more fun. And so when you guys are looking at the market this week and you're trying to figure out, like, what do I do? You shouldn't be going hand over fist long right now because you're late. You should be looking to areas that you feel comfortable applying risk and looking for the next big move, which we do need some type of retrace in order to get that. But who knows? The market is, it's on steroids right now. So we'll see what happens. But that brings me into this playbook. So looking at the playbook, I expected a gap up into 570. I think we're at 572 right now, so I'm not surprised. We'll see where it opens tomorrow. Again, with SPY, the overnight thing's kind of weird because if we open it, early in the morning at 570, then we're exactly where I expected it to be. So we'll have to wait and see. But 570 is going to be the line in the sand. That's the most important level, right? So every time we get on here, I tell you guys what level is the most important. 570 is the most important level. Let me talk about why. If we take a look at dealer positioning and we go to this week, 516, we see that 570 is the most important level where dealers are long. Okay. So if price gets over 570, dealers do not have to hedge that risk. They can allow the market to grind higher, right? They have no responsibility. So 570 is a pretty important level. The second reason 570 is a really important level is if you go 2 weeks out to 530, you also see that dealers are short 570. So I call this a flip point. So essentially, when the price gets over 570, the dealers no longer have any action on that position. So they can ride the position. And then they have to hedge the risk on the 570 position that they're short on, which is 2 weeks out, which can also help the market melt higher, right? If we go back, we look at dealer environment, right? we know that the dealers have been in a positive gamma environment, with the main level being 565. So that means we're in a positive gamma environment, most likely going into tomorrow. And if we look at 565, we can see that the dealers kept the price above it. Okay, so right there, environment flip, 565. So price staying above it means that we're in a positive gamma environment. Positive gamma goes back to what T just talked about with the VIX, which is where you don't get those violent swings in the market. Now, the reason this affects people is people want to go short. And when you go short in a positive gamma environment, usually the market just melts. And you don't get those swings that you do in a negative gamma environment. So you get frustrated, you get chewed up, you get eaten alive. So the reason why I'm talking about this is if we're in a positive gamma environment and price is over 570, and you know that you're in positive gamma because of 565, if price is sitting up here, unless it somehow gets below this level, there's no downside. So the only thing that you need to understand in looking at this week's plan is the 570 level. If we stay above 570, there's a good chance we're going to push up into 575, which is the gamma resistance. And if we get over that, then we get to our weekly target, which is the 577.77 area, or essentially the 580 gamma target up here. If we get back down below 570, then this flips back to bearish and we come back down into the 565. If we flip the 565, then we get volatility and we come back down into these lows, right? So very, very simple, yet complicated, okay? So 570 is going to be a really important level to pay attention to. As long as you're over 570, you're looking for that move into 575. Over 575 gets you to your weekly target. Break 570, come back down into the flip in the environment till flip point. Break that, volatility kicks in, back down into the low. Okay? So complicated but simple at the same time. 570 is going to be a very important level to pay attention to. Okay? All right. Let's get into some targets real quick. Also, fuck Tim Walz. So, Tesla, we're looking at 337 for the month. That's the month of May. 337. If we can get through this order block right here, I don't see anything that slows this thing down. It's sitting at 314 right now, so it's above it. So as long as you stay above this area, I'm looking for this to catch legs up to 337. Okay? We like that. NVIDIA, I'm with T. I have a target on this one, 126. That's the monthly move. So that's for the month of May. So 126, sitting at around 120 right now. Looking pretty good. Again, if the market is bullish tomorrow, we're looking at that nice push up. Also have the order block sitting right here that T talked about. So you get through that area up to 126. Seems likely over 126 could happen, but again, that would be outside the monthly range. So be careful there. If that's what you're chasing. You do still have these extensions. This is the bottom of the wave. This is the top of the wave, and you can see it bounced at the golden pocket. So first extension is 123, second extension is 133. So it is possible that, it can melt up higher than that 126, but still looks good. AMD also posted this. One second, guys. Uh, all right. Um, AMD, which I also agree, uh, in a nice spot here. 111 is the monthly move for May. So still has a little bit more room there. I think it's at 106 right now. So a little bit more room there. I would say if you can clear this 116.21 area, then you open up this move up here. Okay. So this still looks really good to me. I know it's been a rough run for a lot of people, but even if you look at this on the monthly, this closed inside the golden pocket. See? So I still really like this one here. I know it's rough for a lot of people, but if you did equity, you shouldn't be stressing as much. If you did options, I always tell you guys don't try to time the market when you're doing these larger moves. Just position yourself effectively and play the move to the best of your ability. So this is another one that looks really good to me. So, and then Apple was alerted last week. This is gapped up as well. So far, it's pretty in line with my chart. I think it's sitting at 200 something right now. So I think it's like up in this area right here right now. So if the market is bullish tomorrow and we can get through, this area and hold, then we're looking for that retrace back up to the upside. So far been pretty in line, and that was alerted on Friday. So with that, I'll open it up to you guys and your questions. Reddit, I don't like. I can tell you that because I don't like IPOs that have not taken their lows out. But if you like it here with the golden pocket, you could take the risk. I personally just don't like IPO stocks that have not taken their lows out. So that's my only concern here. But it is in the golden pocket, so it's not a bad place to apply risk. ON, I had a report on this a while ago. It hit. I have this coming up into the golden pocket between 54 and 57. And then if you want to take this thing further out, the next wave on it. Here's a perfect example of an IPO taking the low out. So see how the IPO took the low out down here? That's what I like to see. If this is the wave. Okay, so this is the wave, and you can see, sorry, my dogs keep opening the damn door. Okay. If you two are going to be in here, you need to lay down. Lay down, Bluey. So this one, I like the wave structure here. So you can see, right, clean wave, up, retraces, taps the golden pocket, and now you're hoping that this next wave starts. You still have a lot of things that have to happen. You can see this order block up here that you got to break, right? So you got sellers there that you got to worry about. I might go out to the monthly just so we can see it better. But if you can somehow break through that stuff, then your extension targets are sitting up at about 74 to 88. So I do like the wave structure here. This did take out the low. So from an IPO standpoint, I like this one better than I like Reddit. That's just me from a technical analysis standpoint. Hood's an easy one. So Hood here, you can see the setup. Didn't quite hit the golden pocket, but came really close. Hit 29. We were looking for 26. Tomato. Needs to break through the golden pocket. If it does 66, then the target is 84. So I still like this one. I think Hood is good. Here's another example of an IPO taking the low out. So this was the low of the IPO. You can see how it took it out. And then now it's starting to recover. So for people that don't understand why I don't like buying IPOs, prior to this setup, if you go back through and look at all the IPOs, you'll see something similar. I'm not saying Reddit is going to do this. I'm just saying for me personally, I won't buy IPOs until these things have happened. So not against people that like Reddit or believe Reddit is a good company. Just for me, I don't buy IPOs until they've done those two things. And that, stay true to your systems that work for you, right? As you guys do this longer. So hood, I like. It does need to clear the golden pocket, which is 66.80, and then I like 84 as the target. Above 84 goes into price discovery, and you guys know what can happen there. So I'm a fan of hood. Still AMD shares. Yep. Google. Yeah. Google, I still like. Google tapped the weekly range. So you can see here, Google came down into, make that did. So Google came down into the weekly or the monthly target. So this was the May target, and you can see Google came down right into it, and then it bounced. So this always goes back to, okay, was the news really as bad as everybody made it seem? Who knows, right? It still does need to clear 165. You can see that it was not able to get above that 165 level. I think if you like Google, this is a great place to still buy it. Would I trade Google? Probably not. Too many kind of things floating around. So I don't know if I would trade it. But if you like Google, it's a good place to buy. If you want to trade it, put this in a box and I'd wait for a break. Right? Or you trade the range of the box if that's what you want to do. But it still needs to get through 165, then up to 170, and then can continue on its path. But so far, nothing's really changed from a monthly viewpoint. PayPal weekly. Yeah, PayPal. PayPal looks a lot better than XYZ, whatever the hell you're calling it nowadays. Went a little bit deeper than I was hoping. You can see I was expecting a pullback, but definitely went deeper than I was expecting. I would say based on where it's at right now, I would just play the low here to the high. You can see it broke the box, so get rid of that. I play the low to the high. I put my target somewhere in the ballpark of 81 to 84. Get rid of that, kill that order block. That broke. We'll go ahead and get rid of this line real quick. And we're probably looking at something like maybe a retrace and then up. Right, something along those lines. So we'd be looking for a target area of this. Right, so something like that would probably be my guess if you like PayPal. If you're just trying to day trade it, and you're like, Andrew, I don't even care about any of that, dude. I just want to day trade it. I mean, you're kind of sitting in this key area right here. So you could go short, use that as a stop loss if you wanted to. That's why I kind of have a drawdown here. If it breaks through this area, you got all these order blocks right here, right? You got bears there, you got bears there, you got bears there. So if it breaks through all of this, then I would expect it to go up to that. But it's had a pretty good move. So I would expect a retrace first and then up. That's just me. UNH, yeah, UNH still has more downside in my eyes. Almost there. So there it is. We have a target of 310 to 277. So we'll see if it gets there. But to me, this was a massive liquidity sweep or some type of devious planning. This thing had a 2-year consolidation, was breaking out prior to the CEO being murdered. So I don't know. There's some weird, funny business with this name. Conspiracy type shit. But in the meantime, I think it's come down to 310 to 277. Lily, also similar. Didn't bounce quite the way we were hoping. Still just kind of sitting in this golden pocket. I do still have some risk on this, so we'll see what happens. Needs to bounce here. Needs to bounce here. But hasn't shown any life yet. If you really want to be safe, you want to wait for it to bounce, retrace, and then make that higher low, and then play that move to the upside. You have, see how you've yet to get that higher low. So you want to wait for those buyers to come back in and then play the upside. but I am long on this because it's in my golden pocket. So MicroStrategy's late. Sorry. I know you guys are going to hate to hear it, but you're late. Late as fuck. That's what you guys are. Time to buy this was down at 246 to 206-ish area. If you're buying down here, then you did really well. We had a target of, what was this, like 436, I think it was. 438 to 472. Over 472, then this is looking for 540. You can see this has been set up for quite some time. So 438's at 424 right now. I think it'll get there. Over 470, we open up the move to 540 and then over 540 price discovery. Once it goes into price discovery, you're talking about targets in the ballpark of 640, 664 to 818. So, and if you don't think you can get there, then you haven't been watching MicroStrategies ever. So we'll be watching this golden pocket area here, a break through that, and we're looking at 540. You might get it, you might not. I don't know. Remember, it follows Bitcoin. So if Bitcoin gets ripping, it's going to rip too. Netflix, Meta, and Costco. Yeah, Costco, I'm not a fan of from a trading standpoint. From investing, I do. Netflix, you're late. It's in price discovery. So ride it long. Target's 12. It's at, I think, what, 1500 right now after hours. So I like 1200. I think it's going to get there. I had a report on this a while ago. Back when it was in 900, I posted it. So if you went into long-term equity, it was posted in here a while back. Back when it was in the 900s, I want to say. So make sure you guys are paying attention to the reports that are coming out. Amazon was the most recent one at 225. Tesla 360. Snow still got good value. Hood still got good value. NW still got good value. Uber's at the tail end. Where's it at?